So we have SMT divergence right here. SMT divergence. So that tells me that SMT divergence. I don't know what it is, but SMT divergence. This right here, if this candle can close strong, this will be our market structure shift. And if we break through this imbalance, that would be even better. Because then now this right here and this right here would be our inversion fair value gap. And this right here would be our manipulation line to go lower. Standard deviation. And you see how it almost lines up with this. This is my target. This sell side liquidity. And I need this candle to close below this wick. If it doesn't, then I'll be looking for this next candle to close. If it doesn't, then this fair value gap right here is still respected. So just need to close below this, then I'll be interested in shorts. But if it remains respected, then this can be seen as a sell side liquidity sweep. But as of now, I'm anticipating it to be a market structure shift. And this will only be a market structure shift if we break through this, in my opinion. If it doesn't, then this would just be our sell side liquidity and our fair value gap to continue higher. And then this fair value gap right here will be disrespected. But right now, this is looking like a clear market structure shift and a inversion fair value gap. Alright, so I think I'm remove this and reassess my bias. And I think I might just remove all of this. We're in this 1 hour imbalance. So going short is not a good idea. So this holds, we're going here. So now I'm just on the 5 minute, so the 15 minutes doing, this is a 15-minute imbalance inside a, 15-minute imbalance. Let me see if that holds or not. Going down to the 1 minute. So my bias is definitely bullish now. Definitely bullish. Now this 1 minute is holding price up along with this 15 minute. So we have the order block being respected as well. And now Loy at $147 a day, Andrew $60 a day, and Nieben at $48 a day. Again, just away at it. We can get displacement above this high. Market structure shift. But we need a fair value gap. Alright, so we have all of these highs. These aren't really bad. Sort of success stories in a way. We got correct views on a 14-day losing streak in an XFA. But in all, this will be our breaker block. So I'll remove this. It's not bad. That's not bad. I'm glad we're here. Okay, cool. Losing 14 days in a row and still hanging on to that XFA account is textbook risk management in my books. Our inversion fair value gap. You see, we respect it. So bullish PD arrays are being respected right now. So I want to align myself with order flow. See the bullish order block respected. The 15-minute bullish fair value gap respected. 1 minute bullish fair value gap respected. Bullish inverse fair value gap respected. Now I want to see price attack these highs, and I want to add the time element, so I'm going to wait for the next macro, which is the 1050 macro to the 1110 macro. So this right here is where I want to take my trade inside a macro. So outside of this macro, I just want to see price create structure, so then I can take my entry inside the macro to target these highs right here. All of these stacked highs. What if this gets respected? I'm looking for this to get might take an entry right now just because we would have inversed this 1 minute inversion fair value gap. So I am going to take an early entry with a tight stop loss so that if we do come back to here, I'm not losing a whole lot. So my stop's only going to be just below here. So this is two R trade, which I could target a 3R trade. And let's just see if this hits or not. Which I do think we will come down to here, but if it respects this, then I did not want price to leave without me. Right now I want to see this fair value gap to get ran through. So if this holds, then we're gonna go lower. So I need this to get disrespected. This bearish fair value gap, I need it to get disrespected. So we are in the macro right now. So coming down to the 2 minute down here, I don't think we will. So I'm going to treat this as a breakaway gap. This 2 minute breakaway gap. So 2 minute breakaway gap. So we are in the macro session. So I'm going to remove this. And we do have equal highs put in here. Now we want to see this low to get swept. Alright, so we sweep this. So if we could get a nice rejection, I will add to my position, and I will move my stop to this low. Alright, so I like that rejection, but I'm not going to add yet. If we can expand, so if we can expand above this high, this becomes our breaker. And we get an internal market structure shift. So I don't care about this SIBI anymore. All I care about is if this breaker can form. If this breaker forms, then this fair value gap is going to get violated. Because the idea behind it, if the breaker forms, we're going to retest it, tap into this order block, and then target these highs, right? So this right here becomes our order block. And this right here will be the second entry. So I'm going to add to my position here, targeting here, with my stop below this breaker. So I'll only be risking 180 on the trade because my stop will be moved up. So I am going to add a buy limit here. Or I won't add it yet, just in case it dips down and I can get a better fill. But yeah, so now alright, so we have that breaker formed now, and we've broken this fair value gap. So I'm looking for a retest to this fair value gap or this order block or this breaker block, but this breaker block is inside this fair value gap. So this is a 3R trade. First TP hit, going to de-risk, put my stop right here, just above the breaker. Two-minute breakaway gap. So what a breakaway gap is, it basically is, once we get this initial fair value gap, we get another big expansion move, then this fair value gap shouldn't get revisited. Just because price is so bullish, you wouldn't want price to come back, dip all the way back down here, and then go up, when it could just dip down to this big imbalance, and then go higher. So that's basically what a breakaway gap is when we get a expansion move with displacement, which is a fair value gap, and another expansion move with a fair value gap, and you would want this fair value gap to hold price up and not this one, because if this one breaks, it could just come down, hold this one, but then use this one as an inversion to continue lower, target these. So if we went back and went to replay mode, so if this, so I'm looking for this to hold price up, right? So if it breaks, but if you want your entry right here, so you're gonna, price is gonna break this, right? It's gonna break it just to tap into the small 2-minute one and then come back all the way up here. But what's the chances of that happening versus the chances of this happening? Break this big imbalance, come down here, reject this imbalance just so it can retest this inverse fair value gap now, then to target these lows right here, right? All these lows. So that's why I changed my entry to up here, because I knew that if price was going to come back down here, it's just going to reject this 2-minute and then bring price back up to this inversion and use it to come back down to all the way here. So that's what a breakaway gap is. So my TP got hit, and why was my TP there? I forgot why. I had to go to a 3R trade. Forgot where I entered. I think I entered right here. I got like a nice fill on it. And then my stop was below here. I think. No, my stop was below here. And then my TP, I wanted a 3R trade. 3R trade. And yeah, that's A+ setup for me. Market structure shift, bullish PD rates being respected, clear target, made equal highs right here. Now it didn't retrace back to discount, but like I said, price is doing three things: hunting liquidity, rebalancing to equilibrium, which would be this 50%, or rebalancing to equilibrium, which is this fair value gap. So I knew that that 2-minute breakaway gap right here was in discount. and I did not want that 2 minute to get traded into, so I knew that price didn't have to come to discount, because if it did, then it's just going to come and target all these lows. So I was anticipating price to just rebalance to an inefficiency, which is this 2 minute fair value gap, and that's where I took my entry. And we got hit it for 96 ticks, 2R trade, or 3R trade, up 227, because before this I took 2 losing trades. And I keep the same risk every single trade. So every single trade, I'm only risking 30 ticks or less. 30 ticks or less. And I'm aiming for a bigger RR. So those 2 losses got wiped out. And I came back in profit. Because I took 2 losses, right? 2 losses. And I won a 3R trade. So those 2 trades got wiped out, and that extra 1R from that 3R, I got that 200 profit from.